It's day two at the Morningstar Sustainable Investing Summit 2024 here in Amsterdam. I'm joined by Morningstar's head of sustainable investing research at Sustainalytics, Hortense Bioy, who just gave a great talk on the ESMA's new guidelines on, against greenwashing and on fund names that aren't quite pure play green funds. And you mentioned that this is forcing funds to choose to either rebadge to comply with these guidelines or to sell certain assets, companies that aren't entirely renewable focused. And which way do you see most of those fund managers going? Which of the two paths will they be picking?
So I guess it's pretty hard at the moment to predict what the market of ESG funds is going to look like and what changes we are likely to see in the next few months because the rules are still in flux. Let's remind our audience that the European Commission has yet to disclose the results of the review for SFDR. So we also don't know how this is going to work with the ESMA guidelines. So to your question about how the ESMA guidelines are going to apply to funds or what asset managers are going to choose within either rebranding or adjusting their portfolios so that they can keep the ESG key term that they have currently in their name. I think it would really vary. It also depends on whether you're an active fund or a passive fund. We know that in the passive fund space, there's a lot of like light green ESG funds, which, as we know today, are likely to drop the term ESG. In the active space, there's probably more flexibility for asset managers to decide. It depends already how green they are already, if the strategy will be, if they want the strategy to remain suitable for the investors who have invested in the fund. So I think it's really too early to tell. What I can say is that we can expect hundreds and hundreds of funds to rebrand for sure, but we also expect hundreds and hundreds of funds to adjust their portfolios. So yes.
So it sounds like there will be selling pressure on some of these stocks. I'm guessing there are many utilities, right, that are exposed to both renewables and fossil fuels. Do you expect this selling pressure to inform those companies' future direction, that they might actually be backing out of fossil fuels to keep getting that sustainable fund money?
So it's one case, fossil fuel, but there are different types of exclusions that could also impact holding companies differently. So you mentioned fossil fuels, that's part of the Paris aligned benchmark exclusions, but there are also criteria for funds that will have to apply the CTB exclusion, the climate transition benchmark exclusion. And we know that already some companies are looking into what sort of controversies that they have that are known and that would maybe prevent them to be held by a transition fund or social funds, for example. So I think companies are certainly, should certainly be aware. This is one piece of regulation that is going to impact the fund industry in the European Union, and depending on which part of the activity wouldn't really comply with the criteria that are set by the regulator, they would certainly want to understand what they can do to improve that.
Meanwhile, you said hundreds of funds will choose the path of rebranding, right? They can't use the word sustainable in their name anymore. We've seen some creative replacements like climate aware. What are some of the linguistic exercises people are going through to get around the word sustainable?
Yeah, no, I think you're right. We're going to see some creativity there from asset managers to try to find. They're going to try to find terms that don't sound ESG or sustainability related. So there could be, for example, I don't know, we've seen positive change or leaders or stewards or, and of course there are different languages in Europe. So depending on the language, they can work their creativity there. But what that means is that there could be less transparency as a result, as in they may not have changed their investment strategy, they may not have changed their portfolio either, but the name would have changed, and and this name would not have sort of ESG language
Right.
in there, signaling that the fund may have some ESG characteristics. So less visibility as a result for the fund, for investors who are looking for funds with some sort, even if it's light, ESG characteristics, it will be probably harder for them to find those.
Right. Do you see many funds choosing neither of those two paths? So just abandoning the sustainable label, not divesting from any of their holdings, and actually becoming non-sustainable funds as a result?
Absolutely, absolutely. I think this is a time for asset managers to completely review the product ranges and to see where there may be opportunities to consolidate certain strategies. So that's how some ESG funds will disappear, right? They could be merged into other funds, ESG or non-ESG. They can be liquidated if they have very low assets and the managers think they're not viable as such. So we could expect initially the ESG fund market to shrink as a result of this fund name changes, but also fund closures. So it will be interesting to really monitor those changes over the next 6 months, and we'll have a clearer picture certainly by Q2 next year.
Sounds like very mixed outcomes are in store for us. That's been fascinating. Thank you, Hortense. For Morningstar, I'm Lucas Strobel.